All right, traders, this has been one of my best weeks of 2023. I'm up nearly $30,000 on the week. I'm going to explain to you on how I was able to make $16,000 today. It's been a phenomenal green week. And if you watched my last two videos, I told you guys we were going to trade in a channel. If you watched the videos, I told you the trading plan was simple. I told you to avoid the middle, focus on puts towards the top of the resistance channel because we were expecting to just trade in a channel range. I told you guys puts above 414, 415, 416, the exact tops. And then for calls, I gave you guys two levels. I told you calls at this 411.50, 412 support, and also calls at 410 support. We crushed it both ways trading in this week. I'm going to share with you the strategies that we ended up using to absolutely crush it within the stock market, trading and scalping the SPY both ways, the unique gap trading price action strategies, along with the unique 30-minute trading strategies. This video is going to help you a lot in terms of mastering the SPY. Make sure you stay to the end to learn the strategies. Towards the end of this video, I'm going to be providing my newly updated analysis for SPY heading into tomorrow. Fridays are known for being my best trading days, and I'm looking forward to it because this has been a fairly simple trading week. If you traded the channels, like I said, puts above 414, top of the resistance, and calls below that 412 to 410 zone. So let's get straight into it. So in terms of Trader Society, we've been absolutely crushing it, guys. I'm extremely busy. I posted very important updates on my YouTube channel. I understand I haven't been posting, but I've been dealing with a lot of other things. But in terms of the group, we are absolutely killing it. Today, 54 people green, only 3 red. Yesterday, 4 people red, 40 green. Day before that, 49 green, 7 red. Day before that, 45 green, 6 red. Who is getting these results, man? This is what we're doing within Trader Society. We are absolutely crushing it every single week. So I'm going to show you how we're able to do this. So if you want to understand on why I was expecting us to trade in the channel, and my recommendation is, if we're going to trade in the channel, then focus on puts towards the top, which we did, and calls towards the bottom zone, which we did. If you want to learn why I was expecting us to trade in the channel in the first place, go back and watch my previous 2 videos. It explains to you my reasoning behind we're just going to trade in a channel and explains to you the reasonings behind the levels for puts and calls. Now, let's kind of break down some of the trades that were made, and then towards the end of this video, I'm going to give you my newly updated trading plan for the SPY because Fridays are known for being my best trading days. So in terms of the SPY, this is what I was looking at. I'm going to have to show you extended hours trading real quick just to show you some of the key levels, right? So I was expecting us to trade in an overall channel, and if you studied the overall channel was best level for calls 410. Another good level for calls was this 412 to 411 ish, a 411.50-ish zone, right? And then for puts, the top, the resistance was at 414, 415 if you looked at the daily, right? So let's just kind of break down some of the plays and some of the tips, right? So you guys know when SPY gaps down, when it opens up lower than it previously closes, we avoid puts. If we want to do puts, we wait for the gaps to fill. So what that means is, when SPY gaps down, we avoid puts. That does not mean we do calls, but it does mean we do avoid puts, right? So basically, if you looked at the 30-minute chart and you utilize the key levels that I gave you, which was the key support, I told you guys in terms of call options to buy calls, I told you that 411.50 to 412 zone, and if you get stopped out, then buy at 410. Both of the levels worked phenomenally. But if you just look at this is going to give you a great example, right? So what did SPY do yesterday? SPY gapped down yesterday. And you could see it formed this 30-minute trend reversal-ish candle at support towards the low end of the channel, right? So SPY's gapping down. The people who swing traded puts are going to bank if they sell the open. If they get greedy, they're at risk for getting squeezed because it can run back up to fill the gap, right? So if we swing trade puts and it gaps down, we sell the open. If we swing trade puts and it gaps down, we sell the open. Big shout out to Jim C, who ended up swing trading puts yesterday. He's been crushing it all week. Jim had one of his biggest weeks, best week I've seen him trading in terms of SPY, in terms of the trades that he made. He ended up swing trading puts, sold the open, switched to calls. Why calls it open? Because look at the 30-minute chart. 30-minute chart right here, it gaps down when this 30-minute candlestick closes. So at 10 a.m., this candlestick closes. If it looks like this pin trend reversal, what does it do? It spikes. If it looks like this pin trend reversal at support at an even lower, better level, and it gapped down just like yesterday, what does it do? It spikes. That's your confirmation for calls to ride this back up a little bit, to fill the gap. Look at this another beauty on the 30-minute chart. Green, red, green. Green, red, green. And it starts to bottom, at the previous highs on this 30-minute, at the previous highs on the 30-minute. You see that? Then what happens? It spikes and it fills the gap. Then what happens? It spikes and it fills the gap. Once it closes the gap, once it starts to close the gap, it gets crushed. It gets crushed. Do you see those patterns on how you can capitalize by looking at the history of 30-minute candlesticks and identifying these key patterns if you wait for them to develop, if you wait for them to close? So what I do is I wait for these 30-minute candlesticks to actually close, and then when the next one opens up, I take advantage of, okay, this is what history says it's going to do. Let's take advantage and buy calls. And instead of just buying and holding for 30 minutes, I buy the dip, I sell the rip, and then I wait for it to dip again back towards the previous resistance level. And then I buy it again. So I'll make 2 to 3 scalps within this 30-minute candle instead of just holding on bullish 30 minutes, right? So those are some tips for calls, and those are some tips for trading. If SPY gaps down, you avoid puts. And if it gaps up, if it opens up higher, avoid calls. I don't like trading the gap and go, and if it gaps down the gap, I don't like the gap and go strategy. Now, I'm not going to be blind. I understand what I dislike, right? The reason why I dislike gap and go, so right here it gaps up, it doesn't keep going, it gets crushed. Right here it gaps down, it doesn't keep going, it spikes, right? I don't like gap and go strategies. A gap and go strategy basically means when a stock gaps up, you think it's going to go higher. You think it's going to keep on running with the gap up. When a stock gaps down, you think it's going to go lower, right? The reason why I don't like that strategy is because it creates traps. You could see right here, when it gaps up, it creates a bull trap. So if you were buying that strategy, you'd be buying calls at the exact peak. You can see right here, it gaps down, and then what happens? The bulls get trapped, right? The bears get trapped. Bears get trapped, right? You got to think about it from a swing trader. If I'm swing trading and it gaps up, I sell the open with my calls. If I'm swing trading and it gaps down, I sell the open with my puts. I don't get greedy and hope and hold. I just get out, wait for the next one, wait for the gaps to fill, right? But it's not that simple. But some tips I'm giving you is in terms of strategies, I would strongly advise against this gap and go strategy. You can look it up on YouTube. That's all people talk about really in terms of gaps. They don't talk about gap close reversals, but it's not as simple as that. You do have to have the ability to read price action. You can see this is another great example. It gaps down, no gap and go. It just gets it just rises back up to fill the gap, right? But it doesn't work 100% of the time. You can see right here it gaps up and the play was gap and go. It just kept on going up, right? That was a great opportunity for calls, right? So but one thing I'm just going to recommend in terms of like beginner tips, avoid gap and goes, right? If something's gapping up, avoid calls. And I'm not telling you to buy puts. And if something's gapping down, avoid buying puts, right? Because traps can get created. You know, swing traders already banked and they already made their money. Do not bet against these gaps that are trying to fill. Wait for the gaps to fill, if anything. If you want to buy puts and it gaps down, wait for the gap to fill. If you want to buy calls and it gaps up, wait for the gap to fill. Those are some tips that I can give you. But I need you to understand that I'm not telling you to just, just buy calls if it gaps down and then just buy puts when the gap fills. That's not what I'm telling you. I'm just telling you to avoid the gap and go strategy. So I want to make that very, very clear because I don't use that strategy personally. Now, I do trade price action and I do trade on 30-minute candles. So if I'm seeing something on the 30-minute that makes sense and it's still oversold for calls, then I'll take some interesting calls. But if I see puts and it's overbought, I'll take some interesting puts. But just the rule of thumb for me is to not get trapped and not buy something that's overbought for calls, and not short something that's oversold that's oversold because it gapped down, right? So those are just some tips that I can give you, right? Now, in terms of so we went over some 30-minute patterns, and in terms of the support, we were expecting channel opportunities. So you could see right here, this is previous resistance. You could see right here, this is previous resistance right here at this 412 level. So if SPY is going to rocket to 415 and then gap down and form this bullish candlestick 30-minute at this 412 level, that's a great opportunity for calls. Buy the dip, right? We hit calls very, very nicely yesterday at that price. And then in terms of your support, you can visually see one of the best levels for calls is towards this support level right here, towards this 410s, man. You had massive run-ups from 410s all the way to 414, from 410s all the way to 412.90. So again, if it's going to gap down like this and have a very nice run-up and then just sell straight off right before close, you better believe I'm going to be playing calls in the 410s. I waited for a bounce. I didn't get in at 410.28. Jim bought the exact low. When it was at 410.60, I got in. It spiked to 411.30. I sold the rip, and I made over 6K on that. That was such a great trade, buying 411 calls out of the money, then selling in the money, utilizing this strategy, man. And if you just study, like in terms of SPY, like you can just visually see, again, another 30-minute pattern. You have 4 bearish 30-minute candlesticks. You have 4 bearish 30-minute candlesticks. What does it do on the 5th candlestick? It spikes. Look at this, man. It's the same pattern. Look at this. Compare the left side to the right side, and it's at a very similar entry. So I want you to compare this left side right here. You have 4 30-minute red candlesticks to this right side right here. You have 4 30-minute red candlesticks. You see that? And then on the 5th one, right into the close, it spikes. So when this looked bearish on this 30-minute candle, I was buying the dip, understanding that I have very little risk. 410 is my risk, and this can go to 411.50. And another reason why I bought calls, not because of that 30-minute pattern, and it just makes sense, right? It's oversold. They're going to try to spike it right before the market closes. It's just too oversold, right? This was another reason that nobody pointed out, was there was a gap. There was a little gap to fill on the SPY right here that no one was talking about. We have this gap to fill at a 411.50. You can see there's a very small intraday gap at 411.50. That was another reason why I gave this a 411.50 target when we were at 410.60 into the close, and I was extremely bullish, and I bought this and bomb ticked it at the lows, right? And then another phenomenal trade we had was puts. We nailed put. I told everyone, avoid puts, wait for the gap to fill. Now, I played a partial. So when this hit 413.40, I bought puts. I bought them at 413.40. I didn't get squeezed because I stick to my rule of thumb, right? I tell people when it gaps down, I don't do puts. I wait for it to fill the gap for a gap close reversal, right? You could just visually see it works very, very well. Yesterday, there was a gap at, $414. It had a mini reversal, but then it spiked a little bit higher, but then overall it sells off. Today, it was slightly different. It was, instead of swing trading puts like that, it was more of a day trading opportunity where it just crushes and it partially fills the gap. So one of the reasons why I decided to play it as a partial gap close reversal when this was at 413.40, this was one of the reasons. We had key resistance right here at 413.60. It kept rejecting. Previous support reacts as a resistance, super bearish. Therefore, at the bare minimum, this should drop to this previous resistance at 412.70, which is make or break. If that cracks, there's basically no support and it's going to get absolutely crushed. But another reason was the daily chart. I was looking at the daily chart, and again, utilizing the daily chart and the daily candlesticks was how my past 2 videos were able to be so accurate, because I told you guys, I was expecting us to trade in a channel. I was expecting us to just trade in the overall channel range from 410 to 412 at the lows, buy calls, and then 414, 415, 416, buy puts at the highs. And then I said, forget the middle, right? So utilizing the daily candlesticks, I was able to have such an amazing week. And the daily chart told me that this was going to likely sell off. That's why I decided to get in slightly before the gap at the exact highs. I was studying the daily chart. And basically what the daily chart was telling me was this. And again, this is something that people just don't pick up on. They just don't see it like how I see it. So if you just compare, again, the right side to this left side over here, you'll see some similarities. Let me show you in terms of some similarities that I'm talking about. So we're at major resistance, right? And I'm expecting to trade it in an overall channel. So I'm thinking we're towards the top of the channel. I'm going to want to play puts, obviously. If you look at this candlestick right here, just pay attention to this candlestick. So at the time, this candlestick looked just like this. So this candlestick right here, I know it looks different right now, but it looked just like this candlestick right here, and we were towards the exact resistance. So what I'm telling you is this candlestick looked exactly like this candlestick at the time, right? And I was seeing the rejections, and I was seeing how there was a gap to fill right here at 415. It never filled the gap on this day, and then it just sold back off. It just made sense that the gap was likely not going to fill because it was overextended. It was due for a sell-off, and I was looking at the daily candle. I said, it's likely going to flip bearish like it did this time. It never filled the gap, and it flipped bearish, and it topped out towards this key resistance level, right? So I was just studying the daily chart, and to me, it looked like it was going to have a major flip-flop. And again, so look at this candlestick right here, this green candlestick right here. We're towards major resistance. Now watch what happens. I'm going to show you the same exact candlestick. So you can see the similarities right here, and then it sells off. And I'm going to show you more examples right here. Another one's coming up. So if we just visually look, let me go to it. It's a little bit further back. Right here, again, this is what I'm talking about. You have that same type of candlestick. This is what it looked like yesterday towards similar resistance. It gaps down, it shoots back up, it never fills the gap, and then it just sells off and it gets crushed. I've noticed it tends to do that a lot. So you need to study the daily candlesticks. I'm telling you guys, everything you're looking for, it's all in the daily candlesticks, and it's in the 30-minute chart. You use those two frames, you will be unstoppable, man. These 30-minute charts, these 30-minute candles are going to tell you the overall direction for the next 30 minutes. Not all the time, right? I don't trade them all the time. I wait for a clear pattern. And I tell you guys to focus on the lows of the channel with the 30 minutes and the highs of the channel with 30 minutes, right? If you're bullish on the SPY for the gap to fill at 414, you don't go buying calls at 413.50. That's called milking the trend. You don't do that. There was people bullish at 413.50 in the chat, and they were bearish at 414. And I told these people, you can't be bullish at 413.50 if you think it's going to crash at 414. You just need to either wait to buy puts at 414, or you need to take a starter position on puts. You cannot put yourself in poor risk to reward trades. You're going to get absolutely wrecked if you get a terrible entry. And you have to cut your losses extremely quickly, but you have to be in competent trades where it makes sense to cut a loss extremely quickly, right? If I'm buying calls at the exact bottom, then yeah, it makes sense to kind of cut my loss. But if you guys are just buying calls at the exact peak, you're just going to get wrecked, man. You can't go holding hopes and holding and stuff like that. Avoid the middle, man. Focus on the higher end of the channels with puts. Just look at this confirmation, guys. Look at this. Previous support is now resistance. You have a bearish 30-minute candlestick on resistance. It's over. It's going to get crushed, man. It's going to drop. Like, it's just so obvious if you wait for something to develop. Another tip I can give people is just don't worry about the open. If you think you're missing out by just trading at 9:30, if you're the market open, don't worry about it. It's extremely volatile. It's very stressful. There's a lot of flip-flops. There's less chart development. You're not missing out on anything. Don't stress it. Don't worry about waking up super early and just looking to get in on a trade. You're going to, if you wake up early in the morning, you're going to be very excited to trade. Yeah, I got to make money. I got to make a trade. Like, don't worry about it, man. Don't stress it. Don't worry about missing out. The great trades are going to come. The great entries are going to come. You must prepare yourself. You must wait for a great 30-minute confirmation. Look at the daily chart, study the ranges, trade the ranges, avoid the middles. So, those were the reasons for calls. Calls made perfect sense at this 410 dip. Puts made perfect sense at this partial gap close reversal, 30-minute rejection, previous support, now resistance. Daily chart setup would likely flip from bullish to bearish. Also, we have a gap close reversal area at 414, so you're not risking a lot. You can just add some at 414. You don't have to nickel and dime it. So those are the tips I would give you, man. Very, very simple day. If you guys had a red week this week, honestly, like, I'm in shock. I would truly be in shock because I'm telling you, in terms of the trading plans that I posted and the trades that I've been making, this entire week has been over an 80% win rate. It's been a phenomenal week. The polls are absolutely insane within Trader Society. I don't know what other team is getting results where it's literally 80% plus green almost every single day. And we have new people joining every single day, and it just keeps on remaining green. So, if you do want to be part of Trader Society, it's going to be the first link down below in the description. All the information is explained. It's a one-time fee. You get lifetime access. It is the first link down below in the description. You get access to every single trade I make, the real-time entry and exit alerts, the live trading lessons, the video lesson library, live trading voice, the moderators within the chat room, the networking opportunities, the course, the video lesson library, all of the live trades, all of the Discord access. We have truly an amazing team. In terms of what Jim C has been doing this week, truly phenomenal, man. I got to give a big shout out to Jim C and Mohammed. Mohammed has his own channel as well. These guys were absolutely crushing it, man. all week, and their trades were very, very solid. So I got to give a big shout out to both of them, man. If you're serious about learning and taking your trading to the next level, I'm telling you guys, this is the right group for you. You will learn a lot, and you're going to learn how to master SPY. All we do is trade SPY. That's really all we do. If you want to join, it's the first link down below in the description. You can get started on your education, instant, one-time fee, lifetime access. I'm going to be posting a new video tonight discussing a speculative play that I took as a swing trade that has nothing to do with SPY. So stay tuned for that. That's going to be posted later for tonight. In terms of my update for tomorrow, I would say focus on puts at resistance. So if this spikes back to this 414 gap fill level, 414, 414, we're going to be looking to hit puts. And in terms of calls, we have two levels for calls, folks. We have two levels. So in terms of calls, $408. This is where I would go very, very heavy, $408 gap close reversal. And another level that we're going to be watching for calls is going to be 409 to 410 zone. So that's what I would recommend. Calls at 408 is the best price. We're going to be looking at 409 to 410 zone. 409 is pretty good too. And then puts 414. In terms of another price that you need to be aware of heading into tomorrow, because this is very, very important, 411.88. So look at what SPY's doing. SPY's been going lower, right? It popped back up, previous support. Right now, it closed at previous support. Your previous support is at this 412, 411.88 closing price gap. If that reacts as a resistance, we sell back off. If that reacts as support, we explode back up. So what you need to understand, write this down, but understand this is the middle, not the best price to be trading at. Use very tight stops as well. 412 is the middle. If it remains resistance, SPY is super bearish, and it's going to try to fill the gap at 408. If we break above 412, turn it into support, then it's super bullish, and we go to 414, and then you hit puts at 414. We are at a make or break previous support level that is cracked. If it remains resistance, we sell off. If it breaks out and turns into support, we break out. Overall, puts at 414, calls at 408 to 409 range. 412 is make or break. Reacts to support, middle turns bullish. Reacts as a resistance, middle turns bearish. Just understand, when you trade the middle, you will always have a lower risk to reward ratio. If your price target is 408 on puts and you buy puts at 412, your risk to reward and stop loss is going to be terrible compared to the person who buys puts at 414. If you buy calls at 412, your risk to reward is going to be terrible compared to the person who buys calls at 410 support, right? So just understand there is no, and 408 support, right? So just understand risk to reward matters, entry matters, cut your losses super quickly. I cut my losses extremely quickly. I don't hold a loser for more than 5 minutes. I get out super fast. All the people who bought calls towards the top of the gap, trying to milk it, thinking it was going to fill like yesterday, good. You deserve to lose. Previous support reacts as a resistance, bearish 30-minute, confirmation that's bearish. You're chasing the trend. The time to buy calls was at support, at open. Sell the rips, call it. Fuck the middle. Good. These people deserve to lose. Not everyone's going to be a winner. If you're going to enter incompetent trades, you deserve to be a loser. You genuinely deserve it. Understand. Wow, my stop loss sucks compared to the guy. Like, these are things you need to know. But no matter what trade I take, I use tight stops. If I buy puts at 414, I don't risk a lot. Basically, I will risk almost the same. If I had puts at 414, 412, whatever, right? I would risk almost the same, right? I value my trades. Like, my trades have to work in my entry. The timing has to be spot on. And my stop loss is always nearly at my entry, no matter what. I do not hold losers, and I sell winners. I sell my winners like fairly quickly. Not as quickly as my losers, but I don't hold wins too long, but I do fairly well. It's a great risk to reward ratio. I'm at a little bit above a 2 on my risk to reward ratio on my scalps, and it's phenomenal. So cut your losers extremely quick. Don't hold the wins too long. Just sell. Just get out, take your profits, re-enter. Don't milk the trend. Avoid the middle. Know when to call it. Know when it doesn't make sense. It doesn't matter if you're bullish and it thinks it go a little higher. Don't do it. Doesn't matter if it's bearish, you think it goes a little bit lower. Don't do it. Think of the risk to reward. Is this a good entry? Are we in the middle? Are we at the lower of the support? Are we at the higher of the resistance? What makes sense here? What would you rather be in? Would you rather be in puts a little bit early, or would you rather be in calls for a small potential move up, but big potential crash. What do you want to be right about? It's just common sense. If you think it's going to crash at 414, why would you try to be right about calls at 413.50? Why not just take a starter on puts or just wait for puts at 414? Why would you want to try to be right at such a small gain with something potentially outweighs against you? Think, man. Think before you enter your trades. So it's the first link down below in the description if you want to be a part of Trader Society. I will see you guys on the inside.